Good morning. We have McDonald's, Honeywell, Verizon, and Caterpillar. Now, Caterpillar is the one we're going to be talking about. And the reason why we're going to be talking about Caterpillar was Caterpillar earnings this morning were not as favorable as they should have been. However, Caterpillar misses by 26 cents. They beat on the revs. EPS below consensus and revs above consensus. So let's get into it. It's 26 cents worse. We know that. The Capital IQ consensus estimates, that's their estimates for Caterpillar, is supposed to be 1.78. So revenues rose 36.7% year to year to 14.23 billion versus 13.55 billion consensus. The trick of it is they got a mixed guidance. So we're going to get into this at a later date. We just want you to know that some of it is that they're raising expectations for 2011 with sales revenue in a range of 54 to 56 billion and profit per share of 6.75 to 7.25. That's an improvement from our previous outlook of 52 to 54 billion of sales and revenues and profits per share. We're doing okay, basically, is what they're saying. So, stronger growth in the developing world is driving higher sales for Caterpillar. There's been quite a bit of concern in media over the past few months centered on China. While we've seen some softening growth in China, dealer deliveries to end users were up in the second quarter of 2011 compared with the second quarter of last year and grew at a faster rate than the overall industry. Well, that is nice. China is doing a good job for balancing growth and inflation, and our expectations for China remain positive. That said, everyone, we can't lose sight of the significant growth that's going on around the world outside of the United States. How about that? Growth is going on everywhere else, but not in the United States. Economic activity and our business in Latin America, Middle East, Africa, and the CIS are greater. Asia are robust. So Asia are robust, So they're doing good in all of those areas. There was the acquisition that they had, and that was that'll add about $2 billion of sales in 2011, that acquisition that they did. So we will visit this at a later date. That's the update on Honeywell. As far as Caterpillar goes, that's the one we're on. Honeywell is kind of saving a little bit for us. Dow Components Friday morning earnings. Here's the close: 111.60 at 105.51 by 55. That's a $6 gap down. What we'll be doing here is taking that aside, and we're going to gap right down here to a 100-day simple moving average. Okay, slightly below it. As we can see, the bid and ask is 105.53 by 58. We do know that Caterpillar is strong. We do know that seasonality slowdown in Asia is this time every year, and for the past 4 years, everybody thought, oh, Asia's not going to keep making money. They're going to have a hard landing. No, they're not. They're curbing their inflation. Caterpillar is reflecting that the worldwide growth patterns in their key segments, specifically that one, is kicking on all cylinders. There's just a slow patch over there, and that's anticipated. Part of the lower gap down here at this lower handle at 103.59 is going to be an area of interest at the 50-day simple moving average and that rising 40-day simple daily moving average is where we're going to find out where that support level is, and then we're going to buy that thing right off that bottom, because what will happen is anything that reports earnings compared to the previous day's close, when they gap down on an earnings report, whether it's be Caterpillar or any of them that we do, is that at that very moment in that time cycle is that you're oversold on the gap down. And what will happen is that the bargain hunters will come in, they'll start buying up the name, it will go up, it'll put its intraday high in, Once it puts its intraday high in off of that left elbow, then it would be another transactional short. As far as looking for weakness in the name, once it bounces off the bottom, the key to trading Caterpillar today is how it consolidates that bottom. Once it consolidates the bottom in the SMF platform, there would be confirmation with a rising IR, and bid and ask ratios would be ascending in value, which would validate and support the current price level at that price action. Welcome to Caterpillar. This is how Friday is opening up on 7/22 of 2011, and our trade management is to buy the dip, sell short the rip, make a market between the buyer, the seller, the public model. This is what our goal is. This is what we do every day, and we know how to handle these gap downs because these are buying opportunities. The people that were stuck in it yesterday, they should have been buying it back when we were getting in it down around $94 when we had the last market sell off, and it rallied right back up to 111. And not only did it rally back up to 111, it also puts in a this is an earnings, but you can see a double top there as standard technical analysis that people make decisions on. Okay, of course, our decision processes are quite different for lots of different reasons. Here was the top of Caterpillar up here back in late April and whatnot. When we had that 8-week correction, Caterpillar went right down to the market, tested its 200-day simple moving average, rising bullish moving average in the world of technical analysis. That's what the public makes decisions on, okay? So now we get to buy Caterpillar because of our due diligence and our risk management and the way that we do business at SMF was to go ahead, let Caterpillar get its news out. Once the news came out, we could evaluate, transact, and move forward with Caterpillar at wholesale prices versus the people who buy rallies over here. What happens is when you go into an earnings report, if some people were buying Caterpillar at 105 and it went to 111, all the gains are gone. And what we do here at SMF is we enjoy wholesale bids. Welcome to the world of trading wholesale prices after an earnings report. And the initial emotional response within the public tape and how Wall Street reacts to it gives the SMF an opportunity to buy at those wholesale bids and sell back to the public for a profit.